What is up, gang? Welcome back to my channel. Thanks for coming back. Today I want to share with you guys two space aviation SPAC mergers. They should be closing their business deal by the end of this physical year, so that's right around the corner. The first one did already announce the merger date, so we'll go over that one first, and I'll also give you guys my thoughts on whether you should buy or wait till after the merger. But if you guys are finding value from these videos, make sure you smash the like button. It helps this video get out to more people, and subscribe to the channel if you're not already subscribed. But let's get to it. First one is Broadstone Acquisition Corp. BSN is the ticker, trading at $9.95, so pretty darn near the bottom. They did already announce their merger date, which is the 14th of December. And if the merger is approved, then they'll start trading around December 16th under EVTL, which I think is probably the coolest ticker change out of all four competitors, that being Joby, Archer, Lilium, and now this one. But I also think Blade is part of the mix, so technically 5. So I'm a big Joby fan, and that's currently what I'm invested in. But let me say that Vertical's design looks way cleaner, more futuristic. It has the basic template metrics that all the other EVTOLs are trying to aim at, so 200 miles per hour, 100 plus radius, the 5 people capacity is good, and then certifications always important as well, 0 emissions. But I will say that the range is a lot lower than Joby's. Joby's is 150, so that's just something to note. Other than that, I think the design is phenomenal. I do want to point out the interior, the navigation is really cool, and this is going to be helped by one of their partners, Honeywell, so they are playing a part in the software and hardware of this. Now, one thing to point out is this one was founded in 2016, so that's 5 years, pretty young company. I do like that it's currently led by the founder, which is Stephen Fitzpatrick. He's the current CEO, so that's good. Companies tend to do well if they're founded and led by the same person. They are expected to reach production by 2024, which is what Joby is projecting also. So they'll have their certification, they'll start delivering their model, which is the VAX4, and they will start the rapid high-scale production. The one thing I will say is that they are behind in testing. It looks like they just unveiled this in 2020, so a lot less testing has been done. So do I think that this one is a buy? I will say that the valuation is a lot cheaper. It's got a 2.2 valuation, and it's going to be trading at 0.5 revenue in 2026. If you compare that to Joby, Joby went public at a 4.6 valuation, so you definitely are getting a better deal. But then again, Joby is well more established in my opinion. They have Toyota, Uber. I believe they have a partnership with the Air Force, which allows them to get a little bit more valuation. Just moving over to their designs, most of the stuff is in-house, but they do have some great partners. Their rotors will be in-house. Their battery systems, which they're working on, is in-house. This is where it gets interesting. They're going to have powertrains outsourced by Rolls-Royce, so they'll be helping with that, as well as the flight controls, which I mentioned earlier, is going to be helped by Honeywell, and then some of their security will be in with Microsoft. So they got 3 big names here: Honeywell, Rolls-Royce, and Microsoft. And then they also have some good partnerships with airlines. So American Airlines, this one will be getting pre-orders, but they also are equity holders, and we'll explain the share breakdown in a little bit. So not only is airlines part of it, but also Virgin Atlantic, which, you know, Virgin is a well-recognized name, and they'll also be doing some pre-orders. Now, looking at the revenues, this is something I do like a lot better than Joby's, but investor presentations do get exaggerated a bit. But let me just show you some of the numbers. So for 2024, this is going to be the first year of revenue. It's going to be 192, and if we go over to Joby's, they're only going to do 131. So they are going to outpace Joby. So if you can see, by 2026, Joby will only do 2 billion, while Vertical's already going to be doing 3.5 billion. So that's one thing that does stick out to me. They're going to have a lower valuation, and they're going to be bringing in more revenue. So that is a positive over the other competitors. And I'll just close up with the share breakdown. This one's going to get you 14% of the company, whereas Joby was only doing the 10%, and they were having a bigger valuation with a lot bigger share count. So that's going to be 660 outstanding shares after the merger, and then this one's only going to have 222 shares. You will get a lot more value for your share, and the enterprise value is 1.8, like I said, and that's technically after removing some of the equity that they'll be getting through the merger. If you take a breakdown of the ownership, you can see American Airlines and Avalon are actually part of the shareholder. So not only are they customers, but they're also investing in the actual company. So my final thoughts is they have a great design possibly even better than Joby's. And then most of the metrics are the same across the board, except for maybe the range, which might be negligible to an extent. And then they also have a better share structure, and as well as their projected revenues. So those are positive things. Now it's really just for them to be able to execute, since like I said, this one is a newer company versus Joby, which has probably been in for almost 20 years. But these guys do have some solid backing: Microsoft, Honeywell, and a few others. Now, do I think this will run up? I don't think it will run up pre-merger. It might, but I don't know if the risk reward is there right now. As you can see, most of these other aviation SPACs have been going down after merger. They were mostly all at $10, you know, max maybe $13, so you could maybe squeeze 20%, but now they're trading at $7. Joby, probably one of my favorite. Lilium, $7, also got smacked down. And then Archer, which has done the worst. So final thoughts, I would say wait till after merger. It could come down to about 9. Like I said, it does have a better structure, but I don't see this one running too much, especially since the overall EVTOL market has just been beat down. Okay guys, the second pick is NGCA. This one's Next Gen Acquisition Corp, the second. $10 near the bottom as well. There is no merger date on this one yet, so this one was featured in a recent article posted December 2nd. It said 3 SPACs could run jump maybe 50% or more, said by analysts. Now, before you go loading the boat, there are a couple things I want you guys to consider. Now, it's going to be taking Virgin Orbit. Right off the back, fell in love with the stock because Virgin, it sells itself. It's a luxurious brand, very well known. But then I started looking further into it, and I feel like this one may be a bit overvalued. There's a couple other things. It does have a pretty high valuation. It's got 3.7 after the merger, so technically it'll be like a 3.2 enterprise value after the cash that they have. I do want to explain, this one does have potential. Their business model, which is sending out these small satellites in a different method. So the traditional way that people would send satellites out is through a rocket, which is grounded, but Virgin Orbit wants to do it more of a flexible method. So this is the 747 airplane. The rocket, it's down below, so they'll fly the plane up from a runway, and then they'll release the launcher 1, which contains the satellite, and this one will actually take control of its own. And so once it starts flying here, it will get to outer space, and then at some point the separation process starts. The satellite will be released and it'll go into orbit, and then the rest will fall back into the Earth's atmosphere. And so basically their selling point is this will cost less for them, and they'll also be more flexible, so they can technically fly the 747 from any runway, since a lot of customers typically they need to move their satellites to a different launch infrastructure, but that won't be needed in this case, so since they can fly this plane off of any runway. And then they also say that customers can be vulnerable to like military action. So all that's good and well, but the one thing to note is they've only had their first successful launch back in January. So after reading that, I definitely was interested in looking deeper into this one before actually investing. And so just to re-emphasize, they are targeting to close their merger at the end of this year, but there is no specific date for that merger. And then they'll also be trading at a 3.2 billion enterprise value. So that's pretty expensive, but you know, in presentations they do like to make things look nicer, so they do the 2.1 at 25 revenue multiple. So that looks good, but we still have 3 years until then. I will say that they do have a pretty good customer base, the NASA, Air Force, so a lot of government work here, and they've got pretty good active contracts, so a lot of good revenue opportunities here. The rest of the presentation is okay. You guys can feel free to look at their slides. I want to move over to the revenues because they're only going to expect to do 70 million this physical year 2022, so that's good and bad. They do have a lot of growth ahead. They're going to do big percentage in growth, but their overall income is going to be very small compared to their enterprise value, so that's something to consider there, especially with a lot of rising competition like Rocket Labs, Astra, and all these other companies that have recently gone public. So you will get about 10% of the company, and the current free float of it right now is about 26 million, so after merger should be like a 260 million free float. And here it says it's gonna have a 366 outstanding shares, so pretty decent dilution in my opinion, and it will take quite a few years for them to actually start giving you some value for your shares, since they probably won't make good money until 2024, 2025, and that's when they'll start making like 1.5 billion. For now, I don't think this is a very good investment, especially at these early stages of the company. Later, if they can actually execute, then they should do well. One thing I will say is they do have a mission coming up called Above the Clouds, and if that goes well, this one could run As you can see, Astra stock rocketed, no pun intended, but they did have some pretty good volume after they had a successful orbit. So something similar could happen to Virgin Orbit, but for me, I'm not gonna currently invest in this one, and that's because the sector is a lot competitive now. There's a lot of private companies that went public. There's Rocket Labs, Aerospace. Overall, I think the sector will do well, but right now it just looks very crowded. So for now, I would say definitely wait till after merger for both of these. They're kind of expensive right now and the market is red, but I did want to get these on the radar because at some point these will have some positive catalyst and they will start generating some bigger revenue, which will make the share price more attractive. But that is all I have for today's video. I hope you guys learned something from the video. Let me know your thoughts in the comments below, and with that being said, I hope you guys have a wonderful day, and I'll see you guys in the next video.
Sonic boom!